Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate filings to reveal the true financial story. And let me tell you, Maravai LifeSciences Holdings Incorporated has quite the tale to tell this quarter, a story of significant shifts and evolving strategies. Before we dive in, if you enjoy getting straight dope on juicy financial documents, do yourself a favor, smash that subscribe button and ring the bell. We also have a Kickin' Discord community linked down below for deeper dives and discussions. So Maravai LifeSciences has dropped its quarterly report for the period ending the 30th of September 2025, and buckle up because it is a wild ride. We are seeing some major changes from revenue drops to strategic realignments. This isn't just another earnings report, folks. This filing details a company navigating choppy waters with some bold moves. Let us start by looking at their balance sheet for the 30th of September 2025 compared to the end of 2024. Total assets have seen a dip, sitting at $849.2 million, down from just over $1 billion at the end of last year. This decrease is largely due to a drop in cash and cash equivalents, which is down to $243.6 million from $322.4 million. Also, their goodwill has taken a hit, decreasing from nearly $160 million to $129.4 million. This generally indicates impairment charges, as we will see later. Accounts receivable are also down from $38.5 million to $22.5 million, and inventory has also seen a slight decrease. On the liabilities side, total liabilities also decreased from $431 million to $417.3 million. This is generally good news, showing they are managing their debts. Total stockholders' equity has also decreased significantly from $577.2 million to $431.9 million. This is driven by a substantial drop in retained earnings, which fell from $140.9 million to just $45.8 million. Now let us talk about the heart of the matter, the income statement. This is where things get really interesting. For the 3 months ending the 30th of September 2025, revenue was $41.6 million, a significant drop from $69 million in the same period last year. That is almost a 40% decrease. Looking at the longer 9-month period, revenue plunged from $202.6 million in 2024 to $135.9 million in 2025. Again, a drop of over 30%. The company explicitly states that high-volume sales of their CleanCap product for commercial vaccine programs, which were a big contributor in 2024, did not recur in 2025. This is a massive impact. Cost of revenue actually decreased slightly to $36 million from $36.8 million for the same 3-month period. This shows some cost control, but it is not enough to offset the revenue drop. The result is a dramatic fall in gross profit. For the 3 months ending the 30th of September 2025, gross profit was just $5.7 million, down from $32.2 million a year prior. Their gross profit margin also collapsed from 46.7% to a mere 13.6%. This is a massive squeeze. Operating expenses are a mixed bag. Selling, general and administrative expenses decreased by 9.4% to $35.4 million. This is likely a result of cost-cutting measures. Research and development expenses also decreased by 18.3%. However, a huge chunk of operating expenses in the prior year was goodwill impairment. In 2024, they recorded a massive $154.2 million goodwill impairment, which is absent this year. This year, however, they have significant restructuring costs totaling $7.4 million. The combination of lower revenue and a much lower gross profit resulted in a significant loss from operations. They reported a loss of $41 million for the 3 months ending the 30th of September 2025, compared to a loss of $165.6 million in the prior year. While the loss is smaller, this is largely due to the absence of that massive goodwill impairment charge from last year, not because the underlying business is performing better. When all is said and done, the net loss attributable to Maravai LifeSciences Holdings Incorporated was $25.6 million for the 3 months ending the 30th of September 2025, a substantial improvement from $97 million the previous year. However, it is crucial to remember the context here. The revenue drop and margin compression are very real issues. Looking at the 9-month period, the story is similar. Revenue down 32.9% and gross profit down 76.2%. Their net loss attributable to the company for the 9 months was $95.1 million compared to $118.9 million in the prior year. Again, the improvement is largely due to a significantly lower goodwill impairment charge. In 2025, $42.9 million compared to $154.2 million in 2024. Speaking of goodwill, this filing details significant goodwill impairments. They did $12.4 million in the first quarter of 2025 and another $30.4 million in the second quarter, for a total of $42.8 million for the 9 months. This means they have recognized that the value of some of their past acquisitions is no longer as high as they initially thought. This is happening in their nucleic acid production segment, and specifically within their TriLink and AlphaZyme reporting units. This is a strong signal that their core business is facing headwinds. On the strategy front, they completed 2 acquisitions in early 2025. First, the acquisition of assets from Molecular Assemblies Incorporated for $11.2 million, and then the acquisition of the DNA and RNA business of Officinae Bio for $15.1 million. These moves are intended to expand their offerings and integrate their supply chain. But the biggest strategic story here is the 2025 corporate realignment plan announced in August. This involved a significant workforce reduction of about 25% and a planned reduction in their facility's footprint. They expect this to lower annualized expenses by over $50 million. This is a drastic measure signaling a need to become much leaner. These costs are reflected in the financial results, with $7.4 million in restructuring charges for the 3 and 9 months ended the 30th of September 2025. They expect an additional benefit in the fourth quarter from forfeited stock awards associated with these terminations. Now, for a quick look at share counts as of the 31st of October 2025, they had about 145 million Class A shares and 110.7 million Class B shares outstanding. Nothing dramatically changed there. Looking at customer concentration, they highlight Nakalai USA Incorporated as a significant customer, accounting for 36.8% of their accounts receivable as of the 31st of December 2024. For the 3 months ending the 30th of September 2024, this customer represented 21.1% of their revenue. It is important for companies to not rely too heavily on a few customers, so this is something to keep an eye on. Interest expense has also decreased substantially from $13.6 million to $6.8 million for the 3-month period due to a voluntary principal prepayment on their term loan. This is a positive move, reducing their debt burden. Now, a critical point management identified material weaknesses in their internal controls over financial reporting, specifically with revenue recognition and goodwill impairment. This means they did not have effective controls in place to prevent or detect misstatements in their financial statements in a timely manner. They are implementing remediation plans, but this is a serious concern that investors should note. Under their risk factors, they point to the uncertainty surrounding the benefits from their recent organizational changes and executive leadership transition. They acknowledge that these actions could have unintended consequences and impact their financial results. This is a candid admission of the challenges ahead. So, what is the big picture here? Maravai LifeSciences is clearly in a period of significant transition. The loss of major CleanCap revenue is a massive blow, and they are responding with aggressive cost cutting and a substantial workforce reduction. The acquisitions are aimed at diversifying their offerings, but the immediate financial pressure is undeniable. Their gross margins have shrunk dramatically, and while they have reduced overall losses, the underlying operational performance is concerning. The material weaknesses in internal controls add another layer of risk. For investors, this is a story of a company trying to pivot in a challenging market. They have some strong foundational businesses in their biologic safety testing segment, which actually grew in this tough quarter, but the nucleic acid production segment is facing serious headwinds. The future hinges on their ability to execute this realignment effectively and manage their costs without further impacting revenue generation. Alright, that is our deep dive into Maravai LifeSciences' latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.